Thank you, and it's probably been a long time since Perseus has presented at this conference, but we feel it's appropriate at this point as our focus is shifting back towards exploration to sustain our growth profile and leg us up to the next position. Perseus has been establishing itself as a reliable gold producer with a strong growth profile, and at $1,600 an ounce, it's a good time to be a gold producer. The last 12 months, our share price has increased over 250%. We've been included in the ASX 200 and GDX late last year, and our market cap has just exceeded $1 billion US. Cautionary statements. As per the introduction, we're a West African-focused gold producer and developer. We've got a multi-mine, multi-jurisdictional portfolio, and we'll be producing over 500,000 ounces by financial year 2022. Strong balance sheet, strong cash flow to support our growth objectives. And we have a strong board and management, and critically, we spend a lot of time looking after host communities and governments to maintain a strong social licence to operate. Just guidance for this financial year. You can read that, but first half we're in the top range of the production and just slightly over midpoint for the costs. Second half jumps up a little bit as we hit higher grades at Edikan and Sissingué. And importantly, it's 2 years of meeting guidance. So we're establishing ourselves as a reliable producer of gold. Just to highlight the last quarter, it was generated over $31 million in notional cash flow from operations. We ended the quarter with a strong financial position with $80 million of cash and bullion, net cash $50 million of debt of a $150 million corporate facility to help fund Yaouré development. And that's despite spending over $74 million, and all the dollars are US, on the development of Yaouré, which is on track and on budget. Again, just a quarterly production profile that shows a reliable producing production base, but more importantly, we're driving the cost base down, partially with the inclusion of the low-cost Sissingué operation, but also cost and productivity improvements we're achieving at the Edikan mine. And with the inclusion in the beginning of next year with the low-cost Yaouré operation, that will be driven down even further. This is our growth profile. This is based on our own assets, and what we need to do to deliver this growth profile is deliver from existing operations, generating cash flow to fund the develop Yaouré on time and on budget. It's the same owners team and same mining construction contractor like Lycopodium that delivered Sissingué successfully and have delivered a number of successful gold projects throughout West Africa. So we'll be driving up to 500,000 ounces annual production, costs driven down to sort of $800 an ounce, and we'll be doing a number of exercises over the next quarter to show that we can actually maintain that production profile for a number of years into the future. And then it's up to exploration to extend our mine lives and find future growth. And we'll also be looking at inorganic opportunities to sort of drive the growth in the future. Just a quick snapshot of our assets and reserve and resource base. Total reserves are about 3.3 million ounces, total measured and indicated resources of 5.3 million ounces, with an additional 2 million ounces of inferred within our 3 mining sites. Just quickly have a look at Edikan. It was our first mine, developed in 2012, produced over 1.6 million ounces to date. We're pushing the cost down through a revised life of mine plan and some productivity initiatives. Current mine life's 5 years, but we should show this quarter some material extensions to that mine life by including the Esuajah South underground into the mine plan and some optimisation studies around our existing pits at a slightly higher gold price and incorporating the cost benefits we're achieving on site. Plus also some interesting exploration at Agyakusu, which is just adjacent to the mill, which we'll go into in a bit into the near future. Sissingué, Second mine, high grade, low cost, developed on first gold was Australia Day 2018, produced 150,000 ounces to date. Interestingly, by the end of this quarter, we would have repaid the full amount of our capital development, and we're focusing on exploration to extend its pretty short mine life. And Yarrie, this will be one of the mainstays of Perseus going forward. DFS showed strong economic returns at $12.50. It's technically robust. It produces over 215,000 ounces for the first 5 years at $7.34, and tails off a bit for the next 3.5 years. We'll be exiting the CMA pit into the lower grade Yarrie pit. It's fully funded. Development's on track and on budget. It's 40% complete. You see a couple of images of the construction activity, and there's a bit of a flyover on the website if you want to see any further. But we believe there's a significant potential to extend this mine life well into the future, partially demonstrated by an underground scoping study we did on the CMA mineralisation last year, and so the exploration packages, and we'll detail some of the exploration activities further in the presentation. Now on to exploration. Historically, we've been largely focused our financial resources on our growth initiatives. So now we're coming back to look at putting together a significant exploration package program primarily focused around the mine sites, but also looking for generative exploration efforts to find new growth potential. So we've undertaken a number of regional targeting studies, and we're doing some field investigations on exploration opportunities outside of our mining areas. And a bit of a plug, if you've got some good projects and looking for a partner with financial capacity and development and operation experience, then we're happy to have a chat to you. Our group exploration manager, Doug Jones, is running around the conference as well, and I'm sure he'd like to have a chat. And our annual budget this year is $15 million. Specifically, we'll have a look at each site on the exploration front. Edikan's fairly mature exploration belt. It's granites, some sediment-hosted mineralisation on the Shanty Greenstone belt. Challengingly, the granites, when they're not outcropping, are hard to identify through geophysics. We've compiled, in 2017, we had corporate geoscience help us compile all our geological information, geophysical information, did a targeting exercise. We've been running through some of those targets, and we're now just recently updated that targeting exercise and assessing the results of that. And recently we've optioned a project adjacent to us, Agukusu, and there's a significant artisanal site called the Bremen site up there. It's 8 kilometres away from the mill, and I think we're pretty excited about the possibility of that asset. And we're evaluating third-party opportunities within trucking distance of the mill. Just look at a couple of the projects more specifically. Anakokoso is on our mining licence. It's on the Bikitsi-Dadieso shear zone. Has strong geochemical signatures but very limited historical drilling. The artisanal miners have developed a number of shafts, and we've taken rock chips up in that area up to about 10 grams per tonne, so we'll move in there with the rigs at some time in the near future to assess that. And the Bremen artisanal site, as mentioned, is quite a significant size. It's in the order of several hundreds of metres in scale. We've taken a number of rock chips up there, and most of them are all grades. Interestingly, also, it's located in the Kamasi Basin, outside of the historical exploration areas. So we've undertaken drone survey, finalising soil grid over the whole tenement package. We've negotiated access, and we'll be moving in this weekend, apparently, to do mapping and sampling of the artisanal sites, and then we'll follow that up with a number of diamond drill holes to scope out the geological controls, and then we'll pattern drill it with RC. But given it's 8 kilometres away and the Scott scale, we think that this could be a really interesting opportunity for us to extend mine life. Just going back to the CSGS targeting study, Swaja Gap was one of the targets identified in the 2017 survey, which we drilled, and identified a mineralised granite. However, a bit small near surface, and it plunges under the Iron Fury village. But there's a fairly large data gap between Swaja North, which we're mining currently, Swaja South, which we'll be mining underground in the near future. But it is overlain by a fairly significant village called Iron Fury. So we'll step outside that village, punch some deep diamond holes into that gap, looking for either a big enough mineralised body to justify moving the village or access from underground. Looking at Sissingi, geochem anomalies, small intrusives. The targets are pretty small out there. The exploration program for this year is looking at some deep extensions at Sissingi. We've been resource definition drilling to the south in Zanakan, which is about, back one. Wrong one. So Zanakan's 22 kilometres south of the mill. We've also identified some other prospective artisanal sites that we'll be following up. We're infill drilling some of the Fimbiasso resources, which are part of the mine plan, and testing some magnetic rims on the Belay intrusion, and following up some artisanal and geochemical anomalies with air core and RC. And up to the north of Papara, there's some previously identified mineralisation that we were looking at extensions on. This is just a snapshot of what we've been doing at the cashew farm prospect in Zanakan. We've been doing, it's pyrite, quartz veined, steeply dipping metasediments. We've pattern drilled the central part of that on a 25-25 basis, undertaking resource estimates now. And then we're going to be following up the strike extensions. It looks like it strikes in the north-northeast direction for at least 300 metres, and it's open to the south-southwest. So we'll be looking at RC and air core drilling into those extensions. And then more regionally around Cashew Farm, there's some fairly significant artisanal sites up at Blue Hole and Grand Foss, and the exploration team's out there filling in those areas with air core to try to define some geochemical targets to follow up with proper drilling. And then onto Yarri. Yarri's a very structurally complex project with lots of geochemical signatures, and interestingly there's very limited drilling outside the main pit areas and some of our sterilisation drilling. So we think there's a high prospectivity of adding significant resources to this prospect. So our priority targets are essentially the CMA underground, which we'll be follow up with drilling and 3D seismic, and some of the peripheral strong geochem anomalies to identify near-surface mineralisation that we can add to the mine plan. And we'll just step through this list of targets over time. If we look at CMA, like 2018 we did a scoping study on the CMA mineralisation that exits the CMA pit. It strikes about 1.2 kilometres, dips at 30 degrees and is about 5 metres thick as it exits the pit. Resource estimate defined about 600,000 ounces at 6 grams per tonne, which would lead itself to a mechanical rim and pillar operation. So we've got to do some work on bringing that into the mine plan and reserves. But the other question is, how big is the CMA? And so to look at that, we've stepped out, put three deep diamond holes. They're about a kilometre step out, all of which hit mineralisation at about the target range, albeit at smaller widths and lower tenor than we're seeing up near the pit. But we're going to use those drill holes to tie in a 3D seismic survey that's currently underway with high size and undertake some downhole seismic to help map that structure and help target sort of the deeper exploration over the longer term, not just the CMA structure, but all the number of other structures that are underneath that CMA structure. And if we step out more regionally, we've got a big tenement out to the west, and we've just been granted, it's not shown on here, a little tenement over to the east of the mining licence, but there's, again, significant geochemical signatures good structural settings, artisanal activity over particularly Debrezi and Alacran. And the program will be, as we previously mentioned, drilling out the near mine anomalies to identify near surface mineralisation that we can put into the mine plan, having a look at our western geochem anomalies, assess the new targets and process our 3D seismic and recently flown VTEM. So we're putting together a package of geological and geophysical information that we can use to plan exploration over the long term. And in summary, Perseus is in a good shape. Its existing operations are performing well. Its growth profile is in sight to consistently produce over 500,000 ounces a year, and we're now looking forward to exploration to support growth and longevity of our assets. Thank you.